Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, December 6th, 2022. I am Frank Ochoa, aka PivotBoss. Hey, everyone, here's a look at the daily time frame of the ES. Right now, the ES in the previous session, one thing we noted was a failure to hold the previous session's midpoint would open up the previous session's low and could pull back this thing here as deep as the next zone of support down, which is about the 39.30 level. 39.30 would be the next zone of support down after failing to break out above the 40.50 highs. Those 40.50 highs, price held above it briefly, tried to hold here, failed, and we're back down. Again, keep in mind, this market continues to trend higher within this uptrending channel here. We also have an upward sloping PIMA trigger zone. All of that right there suggests more strength overall, but this is a spot in the chart here where if we do pull back to 39.30 a little bit more and we're starting to fail at the previous month's midpoint, that's where a much bigger decline could come about. So a failure to hold 39.05, and that opens up another round of weakness into 3,700. So right now we have a very narrow range of price action that has developed overnight. This is 30% of ADR and a 20-point range for the ES. 20 points right now of range heading into the RTH Open. That's super, super narrow at the moment here. Breakout in either direction can lead to a decent intraday move. Even if it was to the upside, we'd be moving back toward the 40.60 to 40.70 zone. And again, given the current short-term downtrend, morning strength could be sold for a continuation down toward that 39.30 level. Let's take a look here at the NQ. The NQ right now with a 25% of average daily range. This right now, this range, 25% of average, 65.25 points. A tiny little doji bar right there, barely registering on the ADR indicator. This is, again, another failure to break out from this narrow range to the upside. We've seen this thing round off to the right. It had everything it needed to kind of get going to the upside and just couldn't go. Instead, the previous month's high rejected, the previous month's close rejected, and we're working our way back down. That could lead us back toward the previous month's midpoint. That's going to be 11.4. As we've noted before, that level is going to be important. Bulls want to keep it bid, but a failure there opens up the previous month's low. That'll be around 10,600. So right now, very narrow range here that has developed over the last few weeks. A narrow range that has developed here heading into the RTH Open, and we could be looking at a bit more weakness here toward recent support. We take a look at crude oil. Right now, this one's down about 1.33% here. The previous session with a major rejection day. Previous session, crude oil with a nice pre-market rally. It then had a significant rejection at above the previous session's highs. That turned into a massive sell-off over the next several hours. A stop run day down, an outside day down, and this now becomes one of the biggest days that we've seen in a while. A 6-point day. The last few 6-point days were back here, and those were all down days here except for this one, which was a big up day. So, you know, the tendency here is to find a bearish outside day down within a down move here would suggest new lows ahead at the very least. We could be looking at a major test of prices below 75s up ahead. And if we are going to start to push downward in terms of that market structure from this 95 to 75, if we're going to transition down, then 67.55 would be the next key target down below, with the potential to see prices beyond that. So 67.55 would be the next swing target down if this next move here starts to take out 75 and transition to the next zone below. All right, let's take a look here at gold futures. Gold right now up 0.5%. The previous session we had a rejection that was developing early, ended up finishing with a failed new high, outside day down, more than 40 points of range and a big high range day. That was a pretty significant reaction at that edge. Again, keep in mind that was the one day or the one moment here that we actually hit the target. 1820 to 1830 has been our target zone, the upper end of the zone that we mentioned from before. On this break back above 1680, we were looking for a move back to 1740, and beyond 1740 opens up 1830 to 1820 here. We finally got it, and so far we're seeing a reaction. A reaction at that level, a reaction at the previous, the 200-day moving average rather, and the yearly VWAP, all of those being rejected and this thing turning back down. You can see the last couple of times we've been in this area, we've seen selling pressure that's taken us all the way back to 1680. So right now, little by little here, if this is a true rejection here, we likely snap back to the middle of this impulse move. It's about 1770. And then from there, we may see a continuation back towards 1740, and beyond that 1680. So those are the next major targets to the downside here if this rejection is true. Lastly, let's take a look here at the YM. The YM has been very, very bullish, outpacing the broader market to the upside, leading to the upside. It has now reached the 34,500 zone, and actually beyond it, 34,700 is the high so far this month. You can see how bullish this trend has been. Very, very aggressive bull trend here. Every pullback has been a buying opportunity. We have now pulled back here over the last several days. We haven't yet seen the next rotation up take place. The previous session we had a little bit of a bounce here, and then yesterday here finishing through that midpoint and staying low. Right now we do have a narrow range here that's developed of 38% of average range, just 183 points of range right now. And again, it wouldn't be surprising if another rally were to develop here, some sort of rally after weakness, but this is the one time right now where it's starting to look a little more like it's turning down off these upper levels. And the key zone to watch here again continues to be that midpoint down below here. 33,150 is going to be very important. If we drop into that area and can't hold it, then we open up the previous month's low. 31,750 could be that next big time zone below. So again, while we could pull back a little bit more, bulls want to keep this area bid for a return back toward recent highs. But at the moment, short-term downtrend developing. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.